So just for some more clarity on what is this stop loss, what is the stop loss and target price? Like, I'm still a bit confused on that part. And how do I know the stop loss in the graph?
Yeah, like for example, we discussed this. This share moves with this range on a weekly basis. So every
Correct.
time, like for example, I buy over here, remove the other charge to it's moving in this band. This is the bottom.
Yeah.
So if I'm a daily trader, it is going to fall down over here on this line.
Correct. Correct.
When it falls down over here, yeah, that's my stop loss or that's my buy point. I'll buy it over here. Buy it with the intention that if it breaks this line, I'm going to sell it. If the
Okay.
price falls any day below this line, I'm going to sell it. So that becomes my stop loss. Yeah.
Okay.
Means I will make a small loss and not a big loss. Okay. So
Okay.
maybe I could decide if it breaks, this is the stop loss. If it breaks this, the next level could be here. You see now
Correct.
this range is moving.
Yeah.
Range. Yeah. Also, there is this 200-day moving, 200-day weekly average over here. So I'm not complicated. So stop loss is something I have there's a certain basis on which I have taken a call to buy. If it breaks that base or that logic of whatever tool I have used, I will sell out and exit, make a small loss. And
Yeah.
this is the resistance zone. So whenever it reaches over here, it's not been able to go up. So it's time for me to sell. So it gets resistance comes in over here and the share price doesn't move up. So this is time for me to sell.
Okay.
So stop
I
loss
see.
and sell.
All right. So this brings me to my last two questions I have. First, I'll ask the first question. What suggestions do you have for youngsters like us on stock market and technical analysis?
So it's a good tool to understand. It's a good tool to learn about. You guys are too young. If the earlier you can, learn, it's
Yeah.
the basis of making informed decision. So all good
Correct.
decisions are the one which are based on some kind of informed decision. Technical analysis basically is a history of the price of that share. Last so
Yeah.
many years. Now it can be multiple years history. Like if I go to monthly basis, this is the history of the share from 2004.
Okay.
Yeah, until today. So it shows me the price movement of this from 2003 actually, until
Yeah.
2000 here. So it's a so based on historical prices, there is a pattern and trend that emerges. That pattern
Okay.
gives me an indication to take informed calls. Now there's one more, tool called a Fibonacci tool. Now, if you look at the Fibonacci tool, this is the Fibonacci retracement. The way this moves is the prices move within a range. So if I click that chart and draw the range,
Yeah.
now I've not done this. I'm doing it for the first time with you guys for this share. So you see, every time this reaches a 23% level, it stops over here.
Yeah.
Every time it reaches a 38% level, it stops over here. See, it's not fallen here. It's not fallen here. Yeah,
Yeah.
the range. 50% level is again a stop loss and a resistance. 61% level is again a stop loss and a resistance. Now see how beautifully this share moves. Every
Hmm.
time I follow a Fibonacci, I do a Fibonacci confirm top and a confirm bottom in a manner. Yeah,
Hmm.
these are my indications. So when it is going down, it is rarely flop, or rather, if it breaks this line, it will come to this line. If it breaks this line, it will come to this line. Similarly, while
Yeah.
going up, if it breaks this line, it will next go over here. If it breaks this line, it will next go over here. The most common,
Okay.
however, is this one, 61.8%.
Okay.
And the chances are now, for example, if it ever breaks this zone,
Hmm.
yeah, in the next few years, its next target will be this zone. It's closer to what I was telling you, 12,500 rupees.
Yeah.
I drew this trend chart. When this trend chart I drew, let's see how closer we are to the entire, Fibonacci matching with the trend line chart.
Correct.
See, it's eventually converging over here. So
Okay.
basically means if it took so much of time for it to move from here to here, so I'll draw that arrow chart. If it took so much of time for it to move from this band to this band, yeah, and if I draw this trend line over here, again, supposing it reaches somewhere here, it reaches. When it comes over here again, it will take similar months for it to reach this level. So next target is closer to this trend line. See, it's actually converging exactly. This is
Okay.
converging, this is converging, this timeline is converging. So this gives me an indication now, if it breaks this zone,
Correct.
this zone, which is a resistance, it will go all the way over here. Other way if I don't look to look at it is next time when it comes over here, I should just buy it because I'm a long-term investor. On this red line, whenever it comes in, I must buy it because I'm a long-term investor and sit tight. In couple of years, it has to go over here.
Okay.
Now, again, since you are taking so much of interest, this is a confirmation that it's a very good long-term chart. See, the RSI, this is the RSI. It's been going up and up and up and up, and we are looking at monthly. Yeah, we're looking at monthly figures. It's been going up and up and up and up. So it has to further complete its journey of going up to this level. You have to look at again the history of RSI. History of RSI goes up to 74% level. And if it is very good, it will go up to 86% level. So chances are very good if, for example, tomorrow something happens and this share comes down to 5,500 rupees, it is something what I'll call as a blind buy. It's a no-brainer.
Okay.
Yeah. Because RSI is supporting it, trend line is supporting it, Fibonacci is supporting it, multiple tools are supporting it. Another one way to look at it is, what is the probability of it falling down over here? Probability is low because it has rarely broken this line, which is the 50-day monthly moving average.
Yeah.
So ideally, I should buy it at, this is the other resistance zone. So this is my target price to buy it.
Correct.
Yeah. So my target price to buy this share is somewhere in the range of 7,000 rupees to 6,800 rupees. If it comes in this one, I should buy it. It will clearly move over the couple of years to 14,000 rupees. So that's kind of a way to look at the long-term trend line chart.
All right. I see. My last question is, I was reading a term called as technofunda. So what is this exactly? And could you please explain?
Again, very good question. Now, technofunda means what? That's again a very good method to follow for long-term investors. Technofunda is technically what is the right level to buy, and funda is fundamentally is the stock or is the company in a good business and it has good financials, good credibility, and a good level of management. So fundamentally, like my stock behavior, which I usually follow, I always go for fundamentally good stocks. I don't go for stocks where the management is weak or the profit is, doubtful. I don't go for such or the industry is on a decline. Now, Maruti is an automobile industry. They will also go into electrical cars. We know it's a rising industry. India consumption patterns are increasing. More people are going to buy cars. So we know it's a growth industry. So fundamentally, industry is good. Maruti till now has had no controversy. It's a very honest company. It has given good profits. It has good share. So it's fundamentally a good share. So therefore, Maruti is fundamentally a good share. Now I look at technicals where to buy. So a fundamentally good share with support of technicals on where to buy becomes a techno-funda choice.
Okay.
I'm looking at a combination of fundamentals and technicals. And I say, yes, this is the one I want to buy. So I look at the buy price. And then I also know once it reaches over here, this will be the sell price. But that's for people who are trading it. But trading it, even there are people also who invest from a long-term perspective. But typically, for example, if it reaches over here after say 2025, 26 is showing it to reach over here. Once it reaches over here, stocks always follow a cycle. If you reach here, it will come down here. If it reaches here, in another 5-6 years, it will come down here again.
Yeah.
Never move up in straight line. Keep that one, important information in mind. But that's the way technicals help you. For example, even if I'm a long-term investor, I would have sold off over here with the intention it will fall down. It did fall down. Again, I can buy over here for another 5 years for it to move up over here. Once it reaches over here, I know it will again fall down over here. Then again, I can buy. So it's a 5-year movement I can look at on this trade.
All right.
Or I can, even if I just buy it over here and keep it over here, the point to keep in mind is this. I'll show you. The point to keep in mind is this. This is the range of the share. Let's take the lower. This is the range of the share. So I'll tell you how it moves. This is something like Elliott waves. Yeah, it's another technical chart. But I'm not going to that. So the way it works is it started from here. So it moves here. Now it will come here at some point of time. Then it will go here at some point of time. Yeah. Then it will come down again over here.
Yeah.
Yeah. And it will again go here. So without complicating the entire thing. So even if I'm a long-term investor, I don't need to worry, because if I bought it over here, yeah, eventually, historically, it is making newer highs. So it will keep going high. But then I should know, I should not panic when it reaches over here. It's going to fall down over here. So I should not panic over here.
Correct.
I should keep in mind, this is a good company share, fundamental in a good market, and I'm already a 20-year or a 10-year investor. So it will follow this pattern, but it will keep growing. So eventually it is moved from, say, let's say today the price is 8,300, 8,000, yeah, and on. So it will 9,000 and odd. So it will eventually move from 9,000 to say 22,000, 23,000.
Correct.
This is showing you the long-term pattern of the chart, unless something major happens and just breaks any of these levels, which is a very, very rare occurrence. Or something fundamentally changes about this company. Then fundamental change about this company, then I have to relook at, do I really want to keep it for a long term?
I see.
So technically, this is the pattern is going to follow.
Correct.
Okay.
Yep. So thank you so much, Mr. Rishod, and this was very helpful, and it was so fascinating to see how this really works in technical analysis and how it relates to stock market, the shares, and many more things. It really looks like a toy I can keep playing around with and exploring more with it. You were simply amazing, and thanks once again for coming, and looking forward to having you for more often on this channel.
My pleasure, Ranveer, and I hope you and your audience enjoys it, and you use the right word. I love to play with this. I also see it as a toy. So it's a serious business, but fun to do. I'm fascinated by the way it all happens.